Hi guys, John here, forexfire. Hope you're all well and you're all trading with the proper risk to reward management and you are being successful this week. Now, as you've noticed, I'm now growing my hair back in a bit of a goatee and a beard. So the kids wanted me to grow my hair and do something different. So not to disappoint anybody, I've took them up on the challenge and this is the result. So with that out the way with, we're going to be having a quick look at something called supply and demand. Okay, now I've held off this for a little bit because I didn't want to over confuse things and things like that. But after seeing Andy, one of the mods in our one of the great mods in our community, doing his EADR, I've been looking at supply and demand, and not only that, I've been sort of looking at implementing certain structure from an ABC standpoint, and came up with a few things which I'm sort of testing at the moment with regards to entries and things like that, where we can sort of try and eliminate the need to use the fibs and the money zone as such, but you still use the order block, if that makes sense, as a sort of entry and possibly a take profit. So what I'm going to do, I'm just going to head to the screen and I'm going to explain certain things, and I've named things with certain parameters, and you're going to hear certain terminology, but I'm going to explain what they are. As I say, I always like to try and make things I do easy to follow, easy to digest. And I just want to get your thoughts on this. When I put it in, I'll put this video in the analysis training area because it's an extra training area. And if I get enough thumbs up, if I get enough emojis on there, because those are read-only channels, if I get enough response from that, we may do some form of extra training with this and some form of extra education using the method. Okay, don't deter from what you're doing already, and don't deter from the modules we have. This is just an extra sort of source that we can add to the strategy that we're doing. Okay, so I'm just going to head over to the chart right now. Before I do that, we must share the screen. It wouldn't be it wouldn't be an educational video without doing that, to be fair. Right, so we're on the naked chart. It's blank. Now I want to explain a couple of things and sort of what I've taken from my trading journey and what the markets give back to us as traders, and certain points of interest, and how we can utilize this. Okay, so if you can imagine the markets, if we're in an uptrend, we have the buyers be in control. Okay, and it gets to a certain point and everybody's holding price, and then people start wanting to sell. Okay, so we create a high point. So you've gone from your base level up to your high point. This creates your ground zero to here. You've gone up the hill with the buyers. The buyers are starting to get exhausted from running up that hill. They let go of the ball, and then the ball starts rolling down the hill. Okay. Now, when the ball starts rolling down the hill, and I'm just going to leave this like this for now. When the ball starts rolling down the hill, the sellers obviously are in control. Now, it doesn't matter where this goes, as long as it's between the ground base and the A point. Okay, and I'm just going to leave this here because I don't want to confuse anybody too much. We have, as the training and as the modules go, you officially have a low. Okay, and because the buyers have run up that hill, you then have a high. Okay, this at this current time means nothing to us. Okay, now once we get the retracement and the ball's running back down the hill, okay? And it's come back into this zone sort of area. We normally, or we have done in the past, done our fibs like so. And you would normally wait for this to come down. And we would call this our money zone, okay? But for today, I'm going to show you something a little bit different, possibly unique as well. So if you can imagine, this has come, we've run up the hill with the ball, the buys are in control, we've then dropped the ball, the sellers are now pushing and running back to grab a hold of the ball. So we've created our first hill, our first step in the market. Okay, now what I want to sort of show you and concentrate you guys on is this sort of thing here. It's a bit like the EADR box, but this is where we are not moving the pattern up one or down one once it breaks a structure. This will always be this structure. And what I've done is I've called this what we call a fire block, okay? Call this a fire block for now. Now what happens is, as we come out, okay, as we come out and we break structure on the high points, okay, once you break that structure there, once you officially break that structure there, this becomes an area of interest for me. Okay, something I've been testing. Now, what I would normally do is I would draw a fibs. Take no notice of the fibs at this stage. The only one I'm interested in is this area here, the 0.5. Okay, so what I would be interested in is marking that area up. Okay, get rid of some of the noise and I'll explain why. Now, ignoring the retracements, okay, we've had the breakout. This is what is important. This right here. This thing right here. Once we've had the breakout of this, once we've had the breakout of this structure from here, okay, I'm then waiting for a push back into here as an entry, a possible entry, okay? And then a move to the upside, right? Because as we see, we've got an A, B, C. Now I'm going to explain this a little bit more detail as we scroll down on the charts. So hopefully that little bit is showing you a little bit more. But what we've got is, and in fact, I'll show you on the chart. It's going to be easier. So if you need to take notes, take notes. I want this to be as easy as digestible as possible, because what we will possibly do is start doing, not straight away, we'll start doing some little bit of fun, a little bit of interaction. We'll do some little chart markups and I'll show you how to look for these areas and how to implement them and how to structurally draw them up. And we can take the things from there, okay? So again, I'm sorry if this is going a little bit slow. I just need to get the way I educate everybody across with this. It's got to be a slow process so it's easy to understand, right? So what we have, okay, guys, as you can see, we've come down, okay? Now, as we've come down, we've broke structure. We've come out of here. You can see clearly this was a lower high, okay? If we do lower high and we want that to 14. So we've got on here a lower high, okay? You've got another one there, to be fair, okay? But as we've come down, this point here, from this point and this point, has broken structure, okay? This here has created a higher high. You should all know this sort of structure and this sort of technique. Okay, so you can see we've come down a downtrend, we've come out, and what we've got basically is an A, B, C. Okay, hopefully you're following along. So if we just get rid of that bit of noise, but again, if I just put that A, B, C, going on what I was showing you up here, let's just see if I can get this on here. I must have got rid of it. I do apologize. As you've got the A, B, C, okay, we can implement the firebox. Let's take a look. Let's just get rid of this. Start from there. I'll go there. And again, from there to there. This will be a good example. So we've had a break, okay, we've took liquidity from there. Took out liquidity there, grabbed it there. It just has to be the wick, okay? Again, from there to there. Halfway point. Delete that off. And as you can see, guys, we've come back in. This here being a fire block, okay? Now, I'm not overall interested on the fire block in itself. It's what we are containing within the structure point. And everything will become abundantly clear very shortly. So again, if we've got this as a fire block, okay, we've come in to test. Okay, we've come in to test this area, and then we've come back out, okay? So we've got that there. Again, we've come here, we've come there. This is a fire block. Just named a fire block for forexfire, to be fair. As we've come out, again, we've pushed out of here. We want our fib. We want our halfway point. Get rid of the noise. And again, guys, look. Get the magic wand out. We've come out, we've wicked. It doesn't have to be the body in these instances. It's a wick. We've come into halfway point. Okay. We've created structurally another sort of waypoint here. We come down to the next leg. Okay, we've pushed out of this structure here. So what's happened is it's grabbed liquidity here. It's come down, it's come back in. It's touched the 50% of the fire block, and then it's shot off again. Okay, it's shot off again. Now, from here, Let's take a look. The retracement will possibly be that one next to the candles again. And the chart's going to get a little bit noisy with this in a minute. I'm going to show you some other stuff. Mark the halfway. Get rid of that. Fire block. And again, we've pushed out. Taken out the area here, okay. From there, as we've pushed out, we've come back in the halfway point, which is here. Yes, it's surpassed a bit, but it's done that, and then it's shot down, okay. So on them there, you've grabbed, let's take a look. On that alone, you're getting a possible 80 pips there. This block, it went all the way down to 334, and you get the gist. And from there, it's come back to retrace that. It's on 183 pips from there. And at the moment, we are creating some new fire blocks. However, we've done the tracement. It's pushed out here, but it's never come back in. Let's get rid of some of the noise. I'm just going to explain this a bit more. Got a block there. Okay, so what we're waiting for is a push out. Okay, from the block, it's come back and retraced. We've got the push out. So again, that's grabbed that. From there, it's come back in, and it's barely come in. It's barely come in. So it started to mitigate. It started to mitigate contracts. It's starting to mitigate contracts that are all inside of here, okay? And each area, whether it's a quarter or whether it's a certain area, you're going to have what we call, on the bottom side, we're going to have what we call demand areas. And those demand areas, let's get rid of that, are basically order blocks. Okay, now we've done a module on this on order blocks. You'll see this area here, the last down before the up. This here would become a demand zone. Okay, we've got an area there. In fact, I possibly wouldn't use that. We've come out and it's mitigated that. It's took that out because this is inside of the bigger fire block. Okay, because this is inside of the fire block, you will have the last down before the up. So you got wick to wick. Okay, again, it's a demand zone because it's coming back in to the price. That's a demand zone. So this could be an area of importance where we could be waiting. Let's just get the right one, John. Where you could have a long position. Now, we spoke about the Fibonacci's, okay, in this demand zone. Your halfway point, which is the same as the fire blocks. So you've got the halfway point there, okay. This would be the area of importance within the order block. 50% of any movement, because after all, the support and resistance between every candle is always a support and resistance. You've got the open and the close, or the wick to wick, would create a zone which in essence will give you a line of support, a line of resistance. So we want the halfway point where the contracts need to be filled, if this makes sense. You could then say, right, well, this is an area of importance. You could have that just below your swing bit. Okay, and then for a supply area, we've got at the moment the last up before the down. Okay, you see this bit here, the last up before the down, the blue candle. Again, we want to swap this to what we call a supply. That's the arrow. I don't want to save the arrow. We've got a supply zone. Okay, so we've got the demand on the bottom, supply on the top. So the floor is the demand, the ceiling is the supply. So as you can see, we're starting to come in to look for these contract areas, and I'm just going to make that one black. We're just about to mitigate this higher area. Okay, so again, let's look to the left, wick to wick, draw this out. Let's get it named supply zone. Let's also have that area there. We also have that as a supply zone. Okay. And again, this is a movement within the bigger fire block. You've got, as an order block, you could technically use that there, the last down before the up, because this is technically on the floor. You've now got a demand zone. Okay, and just have some fun drawing these up. Let's get the 50%. Get rid of that. And I would possibly ignore this one here, because we've broke out of this. So let's just get rid of the noise a bit. So after a bit more of a deeper analysis, we'll just ignore that zone, because now what we've got is from here up to here. Okay, now let's just see where this goes. Again, this is a fire block. Just don't want to confuse things. So we've now officially, okay, we've officially broken out of that one because we've structurally broke it. Okay, so again, if we just move that up to here. So I'm looking for 50% of this block. Okay. There's your 50%. We'll get rid of the fibs. Now, as you can see, the 50%, this orange line here is the 50% of this fire block. Okay. This is a demand zone. You see this demand zone here? This last down before the up. And we've got two demand zones, to be fair. But again, you don't want to overcomplicate things, because you're just going to, you could put 0.5% on each one, to be fair. So we did that, Let's just see what happens here. Call this our demand zone. So it's more or less slap bang in the middle of where they are. I would personally probably go for an entry there. Okay, and I would have the stop. In fact, I would play it safe. I would go for that one there, and I would have that below there. And then obviously what you've got is your supply areas or your supply zones, which is your order block. You could push that up to the halfway of the contract of that order block there. There's a risk to reward of 1 to 4.78, or you've got a 1 to 6. And there we have it. Now we get rid of that zone. Get rid of that. And again, just out of curiosity, if we do the fibs from the bottom to where we've got the top on the break, you can see we've got the money zone. If we bring the money zone into it now, okay. You bring the money zone into it, get rid of some of the noise. You can see we've more or less got an entry here on what we would normally use on the fibs. However, using the supply and demand zone technique with 50% of the areas or the zonal areas of them blocks, we are coming deeper into a retracement where we would be getting a better price than what we would have done if we used the 71 or the 786. So hopefully this might have a couple of light bulb moments with you guys on using these areas on the ABCs as a fire block and halving your zone off, waiting for your retracement coming back in. Obviously your order blocks as well, using them as a supply zone. Again, just to give you an idea, we've got another one here. You see the blue wick. Wick to wick, your template, you've got a supply zone. Okay, so you see, we are in essence just building areas where price could potentially go to. And there's a 1 to 8. Again, you've got another one on the very, very top. The very, very top. Order block. Okay. Change to supply because that's where it is. And you've got your halfway point on there just by the eye. Okay. You've then got a big potential. A big potential of year 1 to 11. Okay, so that's a little bit about supply and demand zones. However, I'm going to see if I've got anything on the charts. Let's just have a look. The Euro GBP. Right, so again, what we've got on here, this hasn't quite sort of went to where I was expecting. We've got the fire block. Okay, but I'm using the order block in here as a supply zone. Okay, the supply zone. You can see the money zone. We're coming a little bit deeper into retracement for it to come into the order block to sort of give us a better bargain, a bargain price. However, the price has sort of dropped off. Okay, the price has sort of dropped off on here. We can see we are creating some equal highs here. And we've moved out and we possibly going to start breaking structure on here. So what you could do again, the last up before the down is a supply zone. You could have that set up there. You could have that there, okay? And you can refine your entries, okay? So you can see 50% of that. Let's bring it down to just above that, the equals, okay? And then let's take a look at a demand zone. The last down before the up. I mean, this is a big demand zone. There's your last down before you up on the candle. Again, demand zone. Mark your halfway point again by the eye. Drag it down to the 50% of the contracts. Okay, and there you have, if the prices was not to go back up, but was to fill this supply zone, you've got a 1 to 5, guys. So technically, if we just grab our curve, we could have that sort of movement. And every time you've got a wave, an A, B, C, you are technically, every time there's a big push, like an engulfing like this, a big engulfing move, and then you have the flag going back in like this. Every time it does a wave, price will start to get exhausted. And each time you create an order block, if this makes sense, like this, wick to wick of your last up before you're down, or you're down before you're up, each time you get to that point, it's going to get more tired and tired. It's going to refine the sort of entry to stop loss. So I'm going to leave this on here. The gold trade, I did a gold trade today. Fantastic. This was all on supply and demand, a signature pattern as well. Triggered to the pip just about. Some nice risk to reward here on a total of 1 to 13. Fantastic, this one. I've got some really good profit on this at the moment. The USD Swiss franc. Again, we've got the fire block. Okay, I've got a 50% of the fire block. Okay, within the fire block of the 50%, we've come down. We've got a supply zone. Okay, so the 50% of that supply zone is also 50% of the fire block. So it's confluence. Extra confirmation, okay? As we've come down as engulfing, we've started creating a flag pattern back up, okay? Now, I've got two areas. This is where I was first interested, the last down before the up. This risk to reward was 1 to 5.63. I've got a 0.5% risk on this particular trade here, okay? As we've pushed out, we've created a further demand zone because we've come out, we broke a structure. As we broke a structure of this area, okay, this area has broke a structure here. So I then will look at the next sell before the buy, create the order block demand zone, and I would take the 50% of that, refine my entry on the next swing point, if that makes sense. And we've got another risk to reward of 1 to 5. Okay, so I've got 0.5% on that, 0.5% on that. And we're starting to get the retracement back down towards us. We'll see if it triggers. USD JPY, similar sort of preference. The 15 minutes within going down a little bit more advanced. I've got a 15-minute target on a supply zone. Okay, we've come in and I've hit the supply area or the demand zone of this fire block. Okay, this fire block, this ABC, the fire block, 50%, it triggered as it come back down. We're in some nice profit at the moment. However, I'm going to risk another 0.5% because as we have broken structure of this point here, broken structure, okay? So once you break a structure, you can look at a previous swing point on the further one down, use that order block, use the 50% as an entry, okay? And you've refined an entry. Now, if this here comes down to retest, which I think it will do when you look at it. Okay, let's just have a bit further look. I'm in nice profit as it is at the moment. And this risk to reward is a 1 to 9. The risk to reward inside of this risk to reward is a 1 to 6. Okay, so as I've refined an entry from a new swing point or a new order block, if it comes down to test this and just pushes that amount of pips, the 43 pips that's on there, it's a 7 pip stop loss, but risk to reward wise, it's going to give me a 1 to 6. So I'm using the supply and demand zones within the swing points of when we have a break of structure. The Great British Pound odds, we went over that. So yeah, there we have it, guys. I don't want to sort of overwhelm everybody, but it's something that I'm looking at structurally, where overall, if you're in on a trade and you're getting your ABC maneuvers, how we can implement order blocks and how we can implement what I call fire blocks on the bigger engulf and move retracement of 50%. Once you come back into that 50%, you're then sort of getting in on the trade and you're refining, and I'll use that word very lightly, you're refining your entries based upon when it touches that and it sort of goes off, it hits a new higher high or a lower low. You are then using that swing point, looking at the previous sell candle before the buy or the buy before the sell, highlighting that as your demand zone if it's on the floor, highlighting that zone as a supply zone if it's on the ceiling. Okay, using the 50% and the stop loss just below the candle, because the candle, whether it's wick to wick or body to body, those are support and resistance, and they're all over the place. Okay, so hopefully that's made a little bit of sense. It's opened your eyes a bit. If you want to see more, on things like this and more on these sort of trainings, give us the thumbs up. Put your emojis in the Discord on this, okay? And over time, once we've ran through the modules on the homework, we'll start maybe implementing this a little bit more. I have been trading this with a little bit as a bit more of an advanced sort of technique. It works. However, you've got to be able to identify and be able to go with the trend. You are trading with the trend. You're basically getting in on the retracement, coming back to those order blocks. And the only way where you will lose is if there's going to be a trend reversal, basically, because it's going to come down and it's going to hit the break structure, take that out, and then it's going to go back down on the shift. Okay, so this has gone on for, I don't know, maybe it's an hour, maybe it's about an hour, but I hope you have found use in this. I'm going to put this on my YouTube channel as well. So anybody who's watching this on YouTube that is not inside my Discord channel, comment Discord in the YouTube. I'll get you inside of the community that we have. Let's grow together. Let's get the progression. Use what we have as a stepping stone. Once you are becoming consistent as a trader, you want to take that next step, just reach out to me and I'll get you involved with the bigger community that we are part of, because this is my aim and it's my passion. It's to help others, and as many as I can. I have a free resource and I have many people that are helping me grow that community that have the same vision. We are the stepping stone in Forex, okay? We are a fantastic community. We are here for anybody and everybody, okay? Use us as a stepping stone. There's no rush to get into live trading. Use us as that stepping stone. Use it as a demo account. Get confident, get consistent, and then we'll take it to the next step, guys, okay? Thanks very much. My name's been John, forexfire.